Welcome to 360 TV. I'm your host, Adonis Lockett, and joining me today, Kim Stallings, owner, operator, and proprietor of Heritage Risk Advisors, teaching us how to navigate insurance with the real estate twist. Insurance is the key to mitigating risk from an investor standpoint. The importance of having proper insurance could be the reason why investors make it or break it. Kim is going to walk us through how to safeguard our assets, mitigate our risk, and just teach us the overall insurance game as a whole. Kim, thanks for joining me. Tell us about you and tell me how on earth you make something as born as insurance sexy, and more so how investors can really take advantage of the loopholes that come with insurance.
Well, number one, insurance is sexy because insurance makes you money, saves you money, and money is sexy. Therefore,
Touche.
protecting your assets is saving you money and makes it sexy. So it's real easy. It's straight math. I'm super excited to be here. I love the MyRE360 platform. Love educating on there. Love the events. Love supporting you guys and everything that you do. So I'm honored, blessed to start this year off right with you guys.
So I do want to chime in. Kim is actually, you're an educator on MyRE360, and you have about 20 modules teaching people literally everything about insurance and how to leverage that as a homeowner and as an investor.
It's pretty high level, but yeah, we get into some nitty gritty in there, which is super important because the devil's in the details. So yeah.
So at any point, if anyone needs a solid insurance agent who knows the game top to bottom, find Kim on MyRE360, www.myre360.com. Click on Find a Local Vendor, and you'll see Kim's beautiful face at the top of the list, walking you through every aspect of the insurance business. So
he's so sweet. He's so sweet. But let me tell you a little bit more about me so that I don't just sound like these fly-by-night agents that is just out there owning a brokerage. Not only do I do insurance, and I'm passionate about insurance, but I'm an investor too.
Okay.
So I'm invested in syndicated apartments. I invest in office retail condos that are landlorded out. I do single family fix and flips, and then some buy and hold stuff and some vertical and horizontal land development deals. And so I feel you if you're here for real estate.
So you are an investor. It sounds like pretty much in every aspect of the investing business. So you know how to craft insurance policies to protect investors across the board.
I'd like to think so, yeah.
So then let's jump right in. Tell me why your trade is important. Tell me why insurance, because most people think when I get an insurance policy, I want the cheapest policy to keep my payments low, to keep my out-of-pocket costs low. Why is insurance important? Why is proper insurance important? Let's start with that.
So I mean, insurance is a game.
Right.
Life is a game. Okay, and it's one of the three oldest industries on the books. There's prostitution, banking, and insurance. And if you really look into it, they follow each other, and that's just the truth. So, you know, we have banking since the first Crusades, but we had to ensure that our money was going to transport across the countries during the Crusades safely to get it where it needed to be to make things happen. So how do we ensure that? Most ancient insurance in the world is called marine insurance because we used to ship everything by boats, and everything else is technically inland marine, which means not on the water, on the dirt. So it's been around for a really long time.
Okay.
And with that, you know, the insurance carriers have picked up some pretty savvy ways to make sure they go to Tahiti on your dollars by not paying claims. So you've got to be smarter than the insurance carriers. You've got to be really empowered to make sure that you're protecting your assets correctly and doing it the right way for the right reasons.
So then that's a great point. If I call you for an insurance policy, do you give me what I ask or do you make recommendations?
I do a little of both.
Okay.
Because until you've been burned, and I mean like literally like burn the house down burned,
Right.
you don't understand the value of what the service of insurance provides. As an investor, that's a fixed expense on your budget that takes profit out of your pocket. And of course, you don't like that.
Right.
Until you get burned. And you have one bad deal go south and it ruins relationships because this real estate industry business is relational, and then things end up being problems.
Okay.
Yeah.
Got it. So you said you will write a policy. Is like, hey, if I call you, I need a policy. But some of that will come with, hey, I'm going to make a recommendation. So give me an example of what that looks like. Because most real estate investors, especially newer investors, they're always looking for a way to save a buck. Right. So personally, I've called in and I've gotten ACV policies in place because it was cheaper than replacement. Up until I had to replace a roof and spend a couple $1,000s when a replacement policy would have just covered my roof replacement in full. My insurance agents did not tell me that, so I had to learn the hard way. At what point do you say, listen, I understand that you're going to save $500 on your premium, but let me explain the big picture. At what point does that conversation come in? Does that come in when a first-time caller says, hey, I know I'm new, I need a quick policy ACV, or do you say, hey, listen, let me explain the difference. Walk me through that, because my insurance agent did not give me that courtesy.
Right. So not all insurance agents are created equal.
Okay.
To be brutally honest with you about the industry, you can go take a 3-day class, and then they send you home with some like app study materials, and then you just like walk into Pearson and take a test that's 3 hours, and as long as you make a 70, cuckoo, you get to sell people insurance. That doesn't mean you know what you're doing.
Right.
That just means you're allowed to carry a license and sell insurance. And then you have to think about, well, what does my particular company do in specific? Well, we are a boutique insurance brokerage from the human's perspective. I'm not a captive agent. I'm a non-captive agent. And so what is the difference?
What does that mean?
Captive agents are, and there's nothing against these individuals, are your Allstates and your State Farms and your Farmers and your Geicos and your USAAs. And they can only sell what's in their insurance box.
Correct.
And if you do or do not fit in your insurance box, or if we want to shoehorn you and cut some stuff off and make some stuff happen to make you fit into my box to get a sale, because it's all sales,
Right.
then we're going to make that work and make you fit as a round peg in a square hole.
Right.
Okay? We don't do that because I'm also an investor.
Right.
So when you call me, not only am I going to give you more than one option,
Okay.
I'm going to put your options all together on a spreadsheet and line out the most important stuff in the one column, because I'm a numbers girl, and then show you in numbers the differences. Okay. And that's going to make you say, what does that mean? What does that mean? Right. I don't understand this. Why is this price different? Why is this value differently?
Right.
And I'm going to be able to come back and open the conversation. Empowering my investors and my clients is why I'm in insurance.
Got it.
Helping you understand this game is why I'm in insurance, so you don't get burned over something stupid.
Right.
So that's how my conversations go. I'm not just an order taker, I'm an educator. And that's a real big difference. It's more important to me that my name stays good and that my brand stays good and that my agents that are out there have a good association to work underneath. Not just that I made that $1 that one time.
Right.
I could make some other metaphors for that, but I won't.
We appreciate that.
You're most welcome. But this is about the long game for me, because if you're an investor, because I write everything under the planet, I want your private business insurance. I want your personal home. I want your personal auto. I want all your landlord deals. I want all your ground up construction deals. I want your apartment deals, your partnership deals, and I want you to tell all your friends. I mean, that is how I keep my business alive. I'm like 100% referral-based networking and marketing. So I have to take care of you. So I'm going to give you the elevator pitch of, oh, this is why you should do this and do that.
Right.
That doesn't necessarily make me any more money. I make a fixed commission off of the premium amount.
Got it.
So if you spend an extra $300, I make like an extra $3.80. I mean, it's not like earth-shattering for me. But it will be earth-shattering for you if a claim gets denied,
right,
or if you end up having a non-coverage claim.
Right.
So in your example earlier about the two different kinds of insurance and somebody educating you on that, I think most people come into it as investors and they say, hey, I got a loan for $100,000. So I want to, in fact, this happened last week. I saw your thing, I want you to write my insurance on the property. Here's the address. I need the insurance for $100,000.
Right.
Okay, stop. That's not how this works.
Right.
Number one, that's not how this works. They're trying to be lender compliant, and that's cute. And most lenders don't have the oversight to realize that lender compliance don't mean a damn if the loan is covered, if the claim never gets paid in the first place.
Okay.
And that's the risk, not only for the owner of the property, but for the lender. Okay? The claim has to get paid. So the things that cause claims have to be covered. And the value of the property has to be covered to avoid co-insurance, which is a sneaky little devil, in order to have that claim pay out. So, otherwise, the lender doesn't get their money.
So let me pause real quick. So everyone knows, your loan amount is not the value of the house, regardless whether you're doing conventional or private financing. The loan amount is typically a percentage of the value of your property, and the loan amount in the investment space is typically no more than 70 or even 75% in some cases of the value of their house. So if your coverage is only 75% of the value of your house and something catastrophic were to happen, you're responsible for that other 25%. So it is important that you know the difference from a policy that covers the loan amount versus the actual value of your house.
But it's even worse than that, baby. This is where I get to give everybody the heart attacks and the doom and gloom. But I'm 100% okay with that because I'm strong. The fact that makes it worse than that is the way insurance is valued is completely different from how real estate is valued in every way.
Okay.
They don't look at the loan amount. They don't look at the appraised value. They don't look at the tax assessed value. None of that matters.
None of that.
None of it.
Okay.
None of that matters. None of it, like the province in Canada. None of it. Okay?
All right.
Part Canadian. So there you go. The insurance is valued off of at the time that a claim happens. So we're not talking about today. We're talking about some supercilious time in the future. At the time a claim happens, how much in a camera snapshot does it cost to buy the materials and pay the labor to rebuild the footprint that we insured?
Right.
If the footprint we insured is 2 stories, brick frame, hip comp roof, slab foundation, 3,000 square feet, at the time the claim happens, how much does it cost to rebuild that exact thing?
Okay.
That's the replacement cost insured value.
Okay.
You may ask yourself, what about inflation?
Right.
What do we do about that? So there's this co-insurance penalty that's in all policies. Typically residential stuff 80%. When you get into commercial, 90 or 100.
What does co-insurance mean?
We go get into there. It's like the worst penalty, like the worst deductible. In short, it means in your policy somewhere it says 80, 90 or 100% or nil, which means none. It says, here's your co-insurance penalty. If you don't insure your property to a minimum of that percentage of that penalty, then we enact this penalty. Most residential in Texas, because we're in Texas right now, is 80%.
Okay.
So it says, if you don't insure your property to at least 80% of the claim at the time value to replace and rebuild it, then we have a penalty. So then you go to the next step of the math, which is I did insure it for $100,000. I should have insured it for like $150,000.
Okay.
Is that less than 80%? Yes. Now we multiply the percentage that you're off by the claim amount.
Give me an example of those numbers.
So, oh God, we need like a calculator. Somebody math with a calculator running around here. Somebody get you a calculator. So I did insure my house for $100,000 because that was my loan amount. Somebody needs to break out a calculator.
Let's break out a calculator. All right.
So, I mean, my math is good, but it's not that good.
Let's go for it.
So I did insure my house for $100,000 because that's my loan amount.
Okay.
But it's a 2,000 square foot house.
Okay.
Replacement cost to rebuild right now is about $150 a foot.
Okay.
Okay, and we'll get into why in a second. So $150 a foot times 2,000 is what?
300,000.
Right. So I insured my house for $100,000 because that's what I scooped it up as a deal on the market.
As an investment deal.
As an investment deal. I scooped it up for $100K, but I did should have insured it for $300,000. So $100,000 divided by $300,000 is what?
33%.
Okay. So 33% off of 100%, 67%.
67%.
So you're under 80%.
By 13%.
Yes. Now we look at the claim.
Okay.
So what kind of claim did we have? Do we just have a roof claim? Do we have a water loss? Do we have a fire? I have no idea. Let's say the claim amount is $40,000.
Okay. $40,000.
So $40,000 times your 33% penalty.
33%, because that's
how
we
underinsured you are.
We said $40,000 times 33%.
Yeah.
13,200.
That's your penalty. So if your claim is $40,000, let's say it was from fire.
Right.
And your AOP deductible on your house, your all other perils deductible, is 1% of the house value.
Right.
So 1% of $100,000 is?
$1,000.
Right. So $40,000 minus your $1,000 claim.
$39,000.
Minus your 13,000, whatever it was.
13,200. 39,000 minus my 13,200. Hold on. 25,800.
So that's what you get for your claim.
So,
but you got a $40,000 claim.
I have a $40,000 claim because I did not insure it properly.
Right.
I'm going to only get 25,800. That means the other $14,200 I'm responsible for.
That's on you, boo-boo.
What would be the difference?
And that's why people hate insurance agents, because nobody stops and says, whoa, I know that I can insure you for that amount of money. Let's don't. Let's don't, because here's this issue. But I mean, the most frequently missed question on the insurance exam are all about coinsurance.
Got it.
Nobody understands like how that math works and how it works out and how it's a penalty.
So is it safe to say that if my house was worth 300 and I only insured it for 100, if I get 300 coverage, my policy is going to triple?
No.
No.
It's not straight line math like that, no.
Okay, so humor me. My policy for $100,000 coverage is $1,000. What
Okay.
would a $300,000 policy look like?
It might be $1,500, $1,600.
So for $600 more,
Maybe, depending on the other coverages and the deductibles. There's a lot that goes
sure,
into
there's
it.
a lot that goes into it, but potentially for less than, let's say, I go from $1,000 to $2,000, and I pay an extra $1,000.
Sure.
I would be covered 100% of any claims. So that $1,000 cost me $14,000.
Can.
It could in this example.
It could, yes. In this example, it did.
So because I did not insure my property properly, $1,000 cost me $14,000. Do you need to say anything else to that? So the problem is, even me personally as an investor that did a lot of volume, I always tried to squeeze.
Yeah.
And my insurance agents would let me get the bare minimum. ACV policy was always cheaper than replacement costs. I
Yeah.
would get the minimum. Hey, my loan is $80,000. I only want $80,000. Until it got to the point they were like, we can't insure you for $80,000 because the house is worth too much.
Yes.
So now what the lender...
There's thresholds for ACV. There are thresholds for ACV.
So now what my lender started doing was mandating that we have some minimum coverage amount. So, but I say that to say, whether my lender enforces it or not, you as an insurance agent, do you feel it's your obligation to tell an investor, listen, your house is worth 300, you are going to kill yourself only insuring it for 100K. Do you feel that you would be crossing any lines making that statement?
No, I say that kind of stuff all the damn time because I'm just for real like that. I'll give you a perfect example. I had a client come to me, prior start on a huge rehab, $1 million house. Loan was only like $500,000 on it.
Sure.
He comes at me, and he had not bought the insurance right, and the lender was coming back, and they wanted to force-place insurance. Of course, you want to avoid that because force-placed insurance is hellaciously expensive.
What does that mean?
So when your lender finds out that you're underinsured or not insured,
right,
because maybe you're super cute and you're playing the game a little too well, and you buy insurance the day of, and then your lender gets that copy of that insurance policy, but then like a week later you cancel it, and the lender, because they're a named insured on the policy, well, they're an additional interest on the policy. They get a notice that you canceled it, maybe because you didn't pay for it, or you just canceled it in general. Then they force place this insurance on you because their risk is uncovered.
Right.
Force place insurance, super expensive.
Okay.
Okay.
All right.
It's not what you want.
Got it.
Buy some regular damn insurance, and that happens in flood insurance and property insurance, all kinds of force place.
Got it. So
he
you have
comes
this
at me.
$1 million investment.
He comes at me, he's got this $500,000 loan. He's done this big fix and flip. It's a nice property here in Dallas, going to sell for a little over $1 million. And he says, I'm going to buy an insurance, like meow, because I've got this problem with this force place. And I said, hey, no problem. Be honest with me. That's the number one thing you can do in insurance. Be 100% honest. It's like going to your doctor.
Right.
Any kind of weird, creepy that's happening, tell your doctor, because the things that they're going to put together, you're never going to think about,
right,
is what's going to save your life.
Right.
And I mean your investment life as well as your physical life. I mean, I'm making that parallel. So he comes at me and says, yeah, I want this insurance. So I give him 3 or 4 options. It's a policy in midst of construction. And here's some options that you have to pay up front in full. Mm-hmm. There are special perils, which is what you want. Replacement costs and cover theft.
What does perils
We'll
mean?
get to perils here in a second.
Okay, awesome.
And then they cover theft.
Okay.
The moral of this story is theft coverage. And then here's some other options that are month to month, because you think you're an investor god, you're going to magically get your project done on some random time frame that you came up with, which
30
never
days,
happens.
30 days. I'm going to
gonna
sell
get this
day
$500,000.
one.
Yeah, it's gonna be gone.
I'm going to sell in day one. They're going to close
Right.
in 15 days. I need a policy for 45 days max.
You're smoking the, investor crazy weed. That doesn't happen for the most part.
And investors,
Yeah.
it never happens that
There's
way.
always something. There's
Never
always
happens that
something.
way.
So so then there's this month-to-month policy,
Right.
and that's a good cash flow thing with you. I sympathize with that. I'm an investor. That's a good cash flow party, but there's no theft coverage, basic perils.
Right.
Cool. I clearly explain the differences on my spreadsheet. Here's a copy of the spreadsheet. Really don't think you're going to finish it on your timeline. I'm not doubting you. I'm just being legit with you on statistics. I would really spend that like extra $150 and buy this damn thing that has some theft coverage on it, because you're going to be advertising for sale this $1 million property. I'm sure you got some, like, I don't know, $1 million stoves and ranges and
Right.
refrigerators and shit in it,
Right.
right, to make
Right.
it look good.
Right. You got some expensive stuff in there.
You're not going to put some basic G, you're going to put some Wolfgang Puck shit in there.
Correct. Right.
$1 million house in Dallas.
Correct.
Right.
So,
That's what he did. Put some Wolfgang Puck shit in there.
Okay.
Some Sub-Zero fridge in there. Great. And then that house got robbed. And what'd they steal? All the appliances. The Viking range, the Viking range hood, the Sub-Zero Wolfgang Puck, massive refrigerator. And they scraped it across the hand-scraped wood floors, and they busted off the trim of the doors to steal it. Because he, did the right thing and took some cute pictures and put it online and put a for sale by me in there and left some lights on so people could be sexy about the house and go up and see it. And then they go, that place vacant all the time. Yoink, mine.
right.
Right.
So come insurance claim time.
So he calls, says, hey, had this whoopsie-daisy. Cool, what's your whoopsie-daisy? Has big theft claim. Ooh, you got a big whoopple-daisy because you opted for that month-to-month policy that didn't have theft coverage. However, I did, because I'm solid, I bought you some vandalism and malicious mischief coverage because I could. So all that hand scraping of the floors and the beating off of the door trim and all that, get with your GC and find out how much money that's really going to cost to fix, and turn that in as your claim, because that's all you're going to get, Big Daddy. That's it.
So if you hadn't been proactive to apply that coverage, he would have been
Scratched.
everything he would have paid
But
out of
what's
pocket.
super cute about this, because nobody thinks a claim's going to happen to them, this guy's suing me right now
No way.
because he thinks that I didn't sell him the right coverage. And I was like, well, that's not what happened.
So-
However,
So that goes back to my point.
so
Hey,
he lost big on that deal. It flipped his deal upside down.
I can imagine.
It flipped his deal upside down because then he had to rebuy all that stuff.
He
Then
had to
it pushed
replace the floors.
He had to replace the floors. He had to replace the trim. He had to replace the appliances because it was advertised with those appliances. So he had to replace all that out of pocket. He was really upset because this is where you get screwed on a claim. I forgot this little cute piece. $500,000 insured value on the house. 1% deductible,
Right.
which is $5,000.
Right.
The sub limit on the vandalism and malicious mischief is
$5,000.
correct. And so his deductible outweighed the amount of coverage on his policy, which happens a lot if somebody's not paying attention.
Right.
Okay? There's a lot of times when your deductible can outweigh the sub-limit of your coverage on one of the endorsed extras that you buy on your policy.
Got it.
And that's just baked in. That's not something that an agent could change if they wanted to. It's there or it's not there. It's a screw up or it's not a screw up.
Right.
So, so he had no claim from the carrier's perspective either, because they cannibalized each other.
Right.
So he's mad. He's 100% in the hole
So then
of his own making.
Of his right. So is it your fault that I got a policy that didn't cover what I needed it to cover?
Nope. I am going to give you the options, which most insurance agents wouldn't give you.
Right.
But I'm going to give the options and all the rope. And if you tie that noose up and hang yourself,
It's on you.
I hope it doesn't happen for you, but I see claims every day.
Okay.
I'm gonna knock all that wood. I see claims every day. So you don't, because you've never had
So-
them. Then you get burned and you're screwed.
So then this investor and like others, if that happened, felt it was your responsibility to make sure he knew what was and was not covered in his policy? Or was it your responsibility to say, hey, this $500,000 policy that you want for table scraps, the monthly, does not include A, B, C, D, E. What was at the later time, at some point I imagine he reached out to you and said, you should have told me A, B, C, D, E.
No, he never said that.
He never said that.
No, because I gave him a spreadsheet with like 5 options on it with all the coverages listed and notes in the bottom that say the good, bad, the ugly about this, the good, bad, the ugly about this, the good, bad, the ugly about this. What do you want to take? I want this one. Let me coach and counsel you. Oh, I don't think you want that one because of this, Y, and Z. My cash flow right now means I have to have this one. Cool. Get it sold quick.
Because you're exposed.
Because you're exposed.
I got to tell you.
That didn't work out for him.
I want to pause and say, at one point, I was flipping 5 or 6 houses at a time. Mm-hmm. And what the insurance agent that I was working with did was give me the cheapest policy to get every one of my deals.
That's that quick nut.
Right? Because what had happened was when I got policy quotes for $1,200, $1,300, $1,400, I was blown away to see a $700 policy come in, and I'm like, this is a no-brainer. Until
for your fixed expense, you're right.
Until
yeah.
I found out that was an ACV claim, actual cash value claim. I mean, policy versus a replacement policy.
Right.
So in that 4-month window that I had, a tornado came through and pulled the roof off one of my houses. And so instead of getting $7,000 for the roof that I would have gotten with replacement costs, I got like $2,800 after my deductible and ABCDE.
Yeah.
So when I called my insurance agent, I said, why on earth am I paying $5,000 to cover a roof that is covered by my policy? And they said, well, you said you wanted the cheapest rate and you wanted to get, you're doing multiple housing, you wanted the cheapest rate. Yeah. I felt my insurance agent did me a disservice by not explaining to me the risk that came with that cheaper policy.
And let's help make everybody that's tuned in that hasn't turned off yet, because don't turn off because this is important. Let's explain replacement costs and actual cash value.
Sure.
Okay, because this is not like a super easy number. And baby, this is not a number that you get. It's not a number that I pick. It's not even a number that the insurance carrier that you're paying for your policy picks. Replacement costs, like I said, is the confluence of, at today's prices, at the day of the claim, how much labor and materials are. Actual cash value is the depreciated amount of that number. And that's determined by the adjuster that comes out the day of the claim.
Okay.
Which is usually a third party.
Right.
Because they don't want a conflict of interest.
Right.
So the adjuster, who's not you, who's not me, who's not the insurance person, who's not the carrier, gets to decide what that depreciation amount is. So your $100,000 replacement cost policy is $60,000 now.
Okay.
That now you're working with a total loss at an ACV of 60 grand, but your loan's 100 grand.
Right.
And then you're upside down, and then you're ruined, and you're on the hook for it. And there's no remediation from an insurance perspective. People get a little twisted when they're having a claim anyway, because they don't realize that claims in general are a 2-part check party, unless it's a total loss. If it burns to the ground, or if you bought an ACV policy and you think it's burning to the ground, go throw gas on it and burn it right to the ground, because you don't want a partial loss. You want a total loss. You want to execute that entire check, liquidate that whole check.
Don't burn your house down.
La la la, you did not hear that from me.
Don't
La la
burn
la
your
la
house
la.
down, no.
La 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 la. In a regular claim scenario, the adjuster comes down and goes, yeah, this is a covered clause loss. Yeah, we're going to pay a claim here. Cool. And they say, your claim is going to be 20 grand on this roof or whatever. Oh, okay, cool. So then you get your check in the mail, and your check's like 12 grand. You're like, ooh, that's not 20 grand. I know my deductible's not that high. The first check they give you is actual cash value.
Okay.
And why is that? Because a lot of people make non-important supercilious claims.
Right.
And you're going to get that ACV check regardless. And you can go to Tahiti with that ACV check.
Right.
But you don't get the recapturable depreciation, which is the difference between the actual cash value and the replacement cost total insured value that you insured your house for, less the deductible for whatever the peril the claim is, unless you fix the problem and you replace the damaged bits.
Got it.
Then you get the recapturable depreciation. Where investors I see get screwed up, and this happened to a friend of mine that works for a roofing company the other day. Guy's out there, he's trying to sell him a roof. He works for a roofing company. He's knocking doors. He's trying to sell roofs. He runs into this guy and he goes, oh, I know my roof is thrashed. He goes, yeah, that roof is thrashed. Let's make an insurance claim. We'll work with insurance carriers.
Right.
He goes, I can't. I said, why can't you? He said, Made a claim on that roof like a year ago. Got that actual cash value check, and
went to Vegas with it.
I didn't fix the roof.
So
and he's like, ooh.
So he can't make another claim then?
No, but he has to finish that claim. Or he can open another claim if he's with the same carrier, but he only stands to gain the recapturable depreciation, which means he's got to come out of pocket the rest of it. So I hope he had fun in Vegas and like gambled well on the craps, because he's got to make up that difference. The issue for that dude in his particular scenario is, I mean, insurance carriers, again, are not stupid. They haven't been around for like 2,000 years being stupid.
Right.
That's a lie. Crusades happened in the 1100s. So, 1,500 years. So,
why does she know that?
because I know stuff, because I'm a super nerd. Don't let this fool you. I'm a super nerd. The issue there is that, they keep a record of claims. And they keep a record for 5 years, 60 months of what claims you had. Did they get opened? Did they get paid out? Did they get closed?
I got to stop you. How on earth do you know the history of insurance? Like, what made you want to get in this line of work where you are an insurance whisperer? Like,
I am an insurance whisperer.
You are an insurance whisperer. Like, I've never,
It's pretty good.
I've never seen anyone talk so passionately about insurance. Tell me how you got in this line of work.
It was the universe. Yeah. Married my first husband. His dad was in insurance.
Okay.
And then we put him through school. He got a degree in insurance.
Okay.
And then he didn't do well with that. But that's okay. And I was like, oh, look, insurance, boring. Married my second husband, who was also in insurance.
Okay.
He did better. Not stellar, but better. Note how this story is going. And he said one day, I think I want to open my own insurance agency. And I was like, isn't that hard? He says, can be if you do it like grassroots and you're an independent, idealistic, insurance brokerage. And I said, cool, sounds like a challenge. We're home with babies. Let's do that.
Right.
So we did that. Turns out I was better at that than him.
All right.
And now I don't have a second husband, but I have an insurance agency. It's like the universe was like, Kimberly, insurance. You need insurance. And then I found it fascinating because it's so contractual and because it's been around so long and because it's got so many pitfalls and holes and traps in it. It's a game.
Do you enjoy what you do?
Yeah, man.
If that's not apparent.
I do. I think it's really hard and really complex, and I really like breaking down super difficult, complex things for the regular mere mortal to understand.
Explain the insurance industry.
It's rough, man. It's not built for you to win.
Okay.
It's a game. It's a game because it's like, look what you could do. I'ma screw you here.
Okay.
Look what you could do. You're super uneducated because insurance is its own language. There's like 4 languages. There's the common language that all of us speak, regardless of where you're from in the world.
Love language.
That's part of it.
Okay.
Now we got 5 languages.
All right,
See what you did to me? So we got our love languages. We got the common parlance that humans normally speak in across the planet. We have medicine, which is its own language.
Right.
Okay. We have law, which is its own language.
Right.
And then you have insurance. Insurance's own language is like super complex. Any insurance policy you get that you don't read, because you get it after you buy the insurance, it's like 190 pages long that nobody reads. One of the sections of your insurance policy is a glossary of definitional words. And you would think, why do we need a glossary of definitional words? Because every insurance company, I'm an insurance agency, not a company.
Okay.
Every insurance company defines what they think replacement cost and actual cash value and peril and theft, and they all define it subjugatively in their favor.
Okay.
And so one size does not fit all. Just because you understand how your insurance worked at one carrier does not mean that fundamentally it works the exact same way at the other carrier.
Okay.
So have an advocate that speaks insurance on your side, because the industry is not built for you to win.
Got it.
It hasn't been around for 1,500 years for you to win.
So it sounds like I'm gonna try to, cause you're dropping some. I wouldn't even say nuggets or gems. You're dropping mountains right
Truth
now.
apples.
So it sounds like my insurance agent shouldn't be someone that writes me a cheap policy. My insurance agent should be my consultant on how to safeguard my assets mitigate my risk, and protect my out-of-pocket expenses. Is that an accurate statement?
Yeah, it's super accurate. You have to, the definition of insurance that everybody agrees on is the transference of risk.
Okay.
So when you're buying insurance, you are transferring your risk to a third party.
Okay.
You're taking a loan out on your risk, essentially. That's why it works with the banking industry so tightly. So how much risk do you want to take on? That's where your deductible comes into play.
Got it.
So you're higher your deductible, you're taking more risk, the lower
Right.
your premium. It's a
Right.
seesaw. The lower your deductible, you're making them take more risk, the higher your premium. And it's an inverse relationship like that.
So I'm going to ask you a question.
Yes.
This is a very touchy question, and
Get
a
it.
lot of investors do this. I see a house.
Mm-hmm.
The roof is shot.
Yes.
It's storm season.
Yes.
I'm going to buy this house,
Mm-hmm.
and I'm going to wait for a storm to come by,
You could.
and then file an insurance claim on the roof.
Sure.
Frowned upon, acceptable. You're working in the gray. Don't do it.
I'm going to give you the I love lawyers answer. It depends.
Okay.
Okay. So if the storm is just a storm, you better get up there with a hammer and go to work on that roof.
Right.
It's got to be a storm.
Okay.
You know what I mean? It's got to be like something because they track all that.
Right.
Actuaries live in rooms without windows and they burn toast because all they're good at is like, I had an actuary live with me. Reed couldn't keep toast unburnt for his life to save his life. This is like personal experience I can tell you about.
Okay.
Guy couldn't use a knife. He's like just putting a fork in stuff.
But
He's
he
eating
can track
it.
a storm
Yeah.
to the hour.
He could crunch those numbers to figure out how to make the insurance carrier that he worked for sing and make that profit daddy, even though paying out billions of dollars of claims. Can't work a fork and a knife. I mean, I don't know what to tell you, but he could do that. So when it comes to these claims, adjusters are smart, man. Not all of them. Some of them show up with little dogs and purses and don't climb up on ladders on your roofs. They don't really know what's going on. But some of them know how to age and weather shingles.
Right.
Because that's been a study.
Right.
Okay, so they can tell if that's pre-existing damage or not.
Right.
If it's pre-existing damage, that's excluded in all insurance policies.
Okay.
Okay, so you got to make sure it's new damage.
Right.
So if a storm comes through, it better be a storm,
Right.
or it's pre-existing damage. However, if you're really savvy and you're talking to me and you're telling me everything, like in the doctor's office with all your itchy scratchies, and you're telling me about everything so that I have a whole picture of what's going on, you're not hiding little details from me, you're going to say, Kim, here's my perfect call. Kim, saw this thing, my RE360. I love you. Want you to write on my insurance? Awesome, what are we working on? I'm going to buy this landlord deal on the landlord policy. The day you buy it, there's a tenant in it? No. Okay, well, it's not a landlord policy then.
Right.
Step one. What are you doing with it the day you buy it? Needs a little bit of rehab. Cool. Who are you buying it from? Somebody that's got all these problems, you know, I'm going to have to put a roof on it, whatever. I'm going to make an insurance claim for the roof. And I go, well, you just can't make an insurance claim for the roof.
Right.
I was like, however, if you know that there's damage and you know that that human that you're buying the house from already had insurance, get your fancy lawyer, which I hope you're talking to write you a limited power of attorney for insurance purposes in your contract. Get a copy of the outgoing insurance policy, because you have up to a year to make a claim on a policy. So let's say there was a huge storm that rolled through here in April, and you find, you know, Joe Smith, and he's selling his house in August. And that house clearly has a pooched roof.
Right.
Obviously a pooched roof. And we know in that area we had this huge storm in April. This guy didn't do anything about it. Copy of his insurance policy, limited power of attorney for insurance. This is like gold. I mean, you need to pay attention to this, okay? Get both of those documents. Now you, the limited power of attorney, buy the house. You, the limited power of attorney, the claim that you want to make being within a year,
Of the storm
you make the old insurance company pay for that roof.
against the previous homeowner.
Mm-hmm.
That doesn't affect you.
Mm-hmm.
Wait. We got back.
But nobody ever talks to me about their itchy scratchy when they call me. They just want like an insurance policy for a closing.
I don't.
And they leave insurance to the last minute, like at the table when people are closing. And I'm like, wait, there's more stuff.
To everyone watching this, I need to repeat this.
I said it was important and I looked in the camera. I did that on purpose.
So I buy a house that is, the roof is shot. I know that 2 or 3 major storms have come through. I talk to the seller. I say,
Let's pause. How do we know that major storms came
well, because I
through?
live
You
in
went-
the area.
No, that don't matter. You go on to like NOAA, National Oceanographic Air Institute, like blah, blah, blah website.
Right.
You go on to like the stuff that the actuaries go on to,
Okay.
which is public access for you. And you find out storm dates.
So I
and
go
you
on
see
the
the
website.
severity of the storm. Because maybe in your neighborhood it was a bad storm, but maybe in that neighborhood it wasn't. Everything is broken down by the, you know those like seemingly worthless 4 digits at the end of your zip code?
Right.
That makes it a 9-digit zip code?
Right.
Those seemingly worthless 4 digits are for insurance.
Really?
That breaks down the zip code into subsectors, and claims, thefts, vandalisms, weather events, all that stuff is in those 4 digits. So you got to make sure that your claim slaughtered those 4 digits. Not
it.
just like Dallas had a bad day.
So
that's important.
I buy a house, I get the seller to give me a limited power of attorney, contact information to their insurance company.
A copy of the deck page.
A copy of the deck
policy.
page.
Yes.
I go onto this website to confirm that this exact neighborhood street had these 2 or 3 major storms come in.
Sure.
Right?
Within that 12-month period,
within that
within a year.
12-month period, I see that hail were in 2 of those 3 storms.
Yes.
There was a tornado that had high winds and all the neighboring houses had roofs pulled off and all. I can confirm that very easily on this website.
Yes.
I can contact the seller's insurance company and say, hey, there was not an insurance claim made for a roof that now has issues where that claim occurred during this time frame. You need to pay for that.
Yes.
And they will say,
okay, we'll send an adjuster out there. Start the claim. Yes, Daddy. Yes, that's how that works. Because the issue you run into is you get your own insurance and then it rains and you're like, I want to make my insurance claim to fix this roof. And they go, man, pre-existing damage. Because it happened under somebody else's watch. Some other people were getting paid the premium for that. So they're the ones on the hook. They were the ones holding the transfer of risk
which you just
for
explained
that
earlier.
policy.
So
they got to pay the piper. But if you don't have all your ducks in a row, you can't make them pay the piper. So talk about your itchy scratchies with me. Let me consult. Let me be on your team. And let's get you paid. Insurance is sexy. Get paid.
So is this something with the information? First of all, I got to tell you, like I'm at a loss of words, and I'm rarely at a loss of words. I talk a lot. As an investor, as being in the real estate agent space, being a lender, I have never heard this information. Is this degree of information common for an insurance agent to give clients they're working with? Or are you a unicorn? Help me understand.
Well, I mean,
because I want to properly level set.
Obviously, I'm a unicorn. Yeah. However,
but
we're talking about people that make a 70 on the test and get turned loose to sell insurance. And there's nothing wrong with a lot of people at other insurance agencies.
There's a little shade in that.
No, there's no shade in that. I'm just saying that the person that passes their medical boards with a 70 gets to be a neurosurgeon. And then there's also words I'm not going to use because I promised I wouldn't, person that passes their boards with 100 as a neurosurgeon. Who you want up in your brain? Not this words I'm not going to say. I'm trying so hard. I'm being so good. Not the person that made the 70.
Right.
Thank you for your minimum level of effort. I want this person that made the 100 hacking around in my brain.
Right.
In the same construct, I don't want the person who just barely passed their insurance exam making or breaking my real estate investment career or my personal home and auto like life. I don't want my transference of risk to be in the hands of somebody that, like, you know, circled C all the way down and managed to get a couple extra points. But
so
you think I'm joking.
You do know that that's the hack.
I'm not joking.
It's statistically the more common answer. So for everyone who's aspiring for a test, listen, C all the way down.
Middle of the road, baby.
You may pass.
Middle of the road effort, middle of the road results.
What do you say to the person that is considering getting into insurance or that's new to the insurance business?
Come work for me.
Tell them again.
Come work for me. I'm going to tell you right now, I work with a couple of universities. They have insurance departments within universities. I take their interns. I bring them into my house. I make them work. I make them work really hard. I go and I get them jobs at fancy carriers that are the biggest carriers out there. And then they're like, whoa. And then eventually they all come back to me because everybody comes home to mama. Everybody comes home to mama.
I feel like we just...
And then they're like, whoa. And I'm like, now that you've seen it all, this is the impact that it has. And it's just the way I play the game is just a little different. Maybe it's not fast enough for everybody that reaches out to me. Maybe they don't like the way I talk. I mean, that's a personal thing. I mean, let's face it, the insurance industry is predominantly, and this is nothing against those individuals, I'm buying their agencies from them as they retire in the next 10 years. Predominantly white, male, Anglo-Saxon, waspy as hell, conservative, Republican, like niche. Because you want somebody that's real conservative with your risk. I get it. I'm a little bit wild. I'm not everybody's cup of tea. I get that. But what I am is incredibly passionate and very well educated on this particular issue. I'm a master of this issue. It's my craft.
I got to tell you.
It's a little different.
I got to tell you, if there's nothing an investor should ever want, it's someone who loves their craft.
You should, yeah.
Right?
Fill your team with people that love what they do.
Right. And I got to tell you, just so personally, over 100 houses flipped, over 50 insurance agents that I've worked with, I've never met anyone that is just as passionate and as competent as you. So your commercial, I'd buy the policy. She'd be my agent. So I got to tell you, it is really refreshing to hear your enthusiasm about a space that most people wouldn't spend more than 5 minutes on just to get in and out of a requirement by the lender.
It's a mistake.
Let's do this.
Yeah.
Dispel, cancel a myth about the insurance industry. What are one of the myths that come with insurance, the insurance industry, that you want to set the record straight right now on?
This is not an equal level playing field.
Okay.
I think that the industry has compelled and futtered and confused the population through really beautiful marketing. I mean, I got a marketing degree, so I love marketing. Really beautiful Geico and Progressive marketing, predominantly auto space.
Right, right.
And in this beautifully conditioned auto space, and I sell auto insurance too, all over the country, they've conditioned us to say, hey, implicitly, all things are equal. Spend 15 minutes and save 15%.
Right.
Okay? Or, hey, all things are equal. Let us bundle. Get your flow on. Whatever.
Right.
I'm saying without saying here.
No, you're saying
that makes you presume, as the buyer, as the watcher of this beautifully crafted like marketing, that, hey, everything's the same. It's a level playing field. I should save the most money.
Right.
This is not a level playing field. In auto insurance, there are fewer dips and valleys. In residential or in general property insurance, the game couldn't be more diverse.
Okay.
A couple of examples there are in the state of Texas, because that's where we are right now.
Right.
Okay, but this applies for other states. There are 3 different types of peril policies that you can buy. What's a peril? The peril is the thing that triggers the policy to pay a claim.
Okay.
It's the fire, it's the lightning, it's the smoke, it's the theft, it's the vandalism,
Right.
it's the, hail, it's the tornado. Those are perils.
Those are perils.
And so those are spoken about in 3 terms. Basic, basically don't cover nothing. Broad, a little bit better than basic, but still if I don't name it as a named peril in the policy, if you don't read this document that you don't get until after you buy it, if you don't read that thing that you don't get until after you buy it, hear the words I'm saying, then you don't know what is named.
Right.
Okay? If your insurance agent just sends you an email and is like, hey, price $1,000, you go, great, buy it. You haven't looked at the endorsements, which are the things they add and subtract to policies to tell you what is named as coverage.
Okay.
So broad's a little better than basic, but it's still, if it's not named, it's not covered. And then you have what's called special perils. Everything is covered unless it's excluded.
Right.
So at a bare minimum, if you hit nothing else from this, never buy a policy unless it's special perils if your house qualifies. Always get special perils. You're doing better than the alternative.
Okay.
Still not great, but better than the alternative. So there's 3 different policy forms. TDP1, TDP2, TDP3, HOA, HOB, HO1, HO2, HO3, HO4, HO5, HO8 forms.
All right, hang on.
That you can buy. Right. So we are not on a level playing field.
Right.
From the form you purchase from a carrier, there are like 3 to 8 options.
Right.
Not every carrier has all 8 options.
Okay.
Okay?
But I, as the investor, am not supposed to know this.
No, you should.
Let me rephrase. It's not typical for me to know this.
You should know why you get a cold too, but the language of medicine puts you at a disadvantage. The language of insurance puts you at a disadvantage. And you don't even get the glossary to know the language to study it till after you buy the damn policy in the first damn place.
Touche.
Not built for you to succeed.
Okay.
Okay, it's not built for you to succeed. The information is readily and freely available. But you don't know how important it is to look until you get screwed, and then you're mad.
So, at some point, I was going to ask you, what makes you stand out from any insurance company or agent? It'd be irresponsible of me to ask that question now. So I guess my follow-on question would be, how do you compete in market presence with you? Because you are the Albert Einstein of the insurance industry. But you're competing with the multi-billion-dollar companies that own your, with fancy quotes and gimmicks. How do you compete with those people and keep business coming in on a weekly or monthly basis?
I try to keep it all referral based.
Okay.
I've never made a phone call, a cold call in my history in my company.
Really?
Nope, I don't do that.
How long you been in the business?
This insurance agency's been open for 6 years.
How long has Kim been in the insurance business?
6 years. Like I told you about these husbands. Like I got roped into this deal by these husbands.
All right.
Universe trying to make me sell insurance.
All right.
But don't judge me because I'm young and beautiful and, all these other things. Like, 6 years is plenty of time. The fact of the matter is that I read paperwork.
Right.
I read contracts. I find it fascinating. It doesn't matter how long I've been doing it. The fact that my peers want to sell me their insurance agencies to make sure that their clients are put in the right hands is really what speaks volumes, because
Right.
I am the old white man's retirement policy. And that's just, you could be Indian. I'll be the old Indian lady's retirement policy. I don't care. That has nothing to do with it. The point is, if you want your clients in good hands, that ain't Allstate. Well, I didn't say that to Allstate. Don't sue me. I'm the good hands for them to be in because I care, and more importantly, I'm educated on the subject matter.
So, and one thing too is I want to make, kind of put that out there. At the end of the day, you are in a very competitive space. So, I like to say that, competition will readily downplay other people's service. So I don't necessarily think you should apologize about, telling these other agencies that are playing the volume game. It sounds like you're playing more of the quality of you're playing the relationship game.
I'm a quality over
Right.
quantity.
Okay.
Because I want you to come back, and I want you to send your friends and family and your business partners.
And we both
Because you get what you need from me.
And we both agree that most real estate investors will typically come back multiple projects over, or bare minimum refer people within their circle to the insurance agent and the other vendors that have taken care of them.
Sure.
So by you taking care of people to this extent, you're not only pretty much solidifying repeat business from this customer, but you're pretty much owning their entire network at that point.
I'd like to be, swimming in your whole pool. I'd like to be all up in your entire ocean.
Right.
But that being said, when you call Allstate, and there's nothing against a captive insurance agent, State Farm, Farmers, USA, Geico, pick any of them, it doesn't matter. When you call them and you get a quote in like 5 minutes or 15 minutes, that's because it's the only thing they're quoting for you.
Right.
Please realize when you call any broker that's worth their salt, they're going to give you more than one quote. Well, that's not, you could use a rater. That's insurance jargon. I don't like raters. I've tried them. I experimented with that. I don't like it. You don't get the same coverage. You don't get the same price. So you're going to just realize that, like, if you need to be at the top of my list to get the deal done, you got to tell me, like, Kim, this is an emergency. I hate that I waited the last minute. This deal just fell in my lap over the side of the truck. I'm at the title house, like, closing right now. Baby girl, I need this right now. I'm going to stop the press. I'm going to get you taken care of. Other than that, as much as I want you to be my only customer, you're not my only customer.
Right.
And whether you're a $3 million deal that goes across 5 states or a $3,000 deal for a house that's being flipped, my team is going to give you the exact same care and attention. Right. And that takes a minute And by a minute, I mean like 45 minutes.
Right.
Okay, that's what I mean by that. To shop all the different markets, to get it on the spreadsheet, to make sure we've done our due diligence, checking where it is, that it's the right square footage, at the appraisal district, at Zillow, what's it made out of, where the replacement cost is in the right place, making sure the value inherently of the home is all done correctly,
Right.
to try to help you avoid screwing yourself over.
Right.
That's the fact. That takes a minute.
Name all of the different insurance coverages your firm offers.
We write everything but monthly major medical.
So everything but health insurance.
Monthly major medical. I would sell you a captive or a risk retention group that has to deal with health for your company. That's not monthly major medical.
Speak English.
Yes, insurance language. If you need insurance, I sell it as long as you're not trying to get your doctor paid for.
All right. So was I right in saying?
No, because a risk retention group and a captive are like fancy policies that you write where everybody becomes like a mutual stock owner in the policy. And I would do that for like a health regime for like a multinational company that had like, you know, employees all over the country, and they wanted to do like an RRG or a captive. So I do that, but only for that subset. I don't do, hey, I need Blue Cross Blue Shield Affordable Care Act tomorrow.
Got it.
I don't do that.
Okay.
Anything else that could need insurance, surety, or bonding anywhere in the world, any asset
10 seconds,
risk class,
go. Give me all of them. Run them down. Go.
oh my God, commercial insurance, bonding, environmental insurance, pollution insurance, residential construction, commercial construction, regular home, landlord, auto, umbrella, commercial umbrella, excess insurance, RRGs, captives, agricultural risk, farming risk, missiles, explosives.
Wait. Let's not glaze over that. Did you say missiles?
I have insured somebody moving a missile from Texas to New Mexico across state lines to blow that damn thing up and then find the uranium and bring it back. Yes.
To all my James Bond villains out there, if you need your missile insured as part of your plot to take over the world, feel free to call Heritage Risk Advisors.
Hey, baby, with Virgin and Space Force and stuff that Elon Musk is doing, that's a little more common than you might think. I got you.
For all your spaceship building, space explorers.
It's a thing.
If you need your soon-to-be spaceship insured, call Kim from Heritage Risk Advisors.
I'm your girl.
All right, so Kim, before we take off, one thing I always want to do, as an investor, I've spent the first half decade trying to figure out how to hack the different trades and vendors I work with. And what I mean by that is, how do I get to the prime of give me everything I need to know to get best use out of the vendor or trade that I'm working with? So this is where I'm gonna throw you in the middle of the 360 circle. And right now, I want you to give us the MyRE360 hack to insurance. So tell us, how do we hack insurance as real estate investors?
Number one.
Wait. Talk to the crowd.
Okay.
Talk to the crowd. Tell us, all of us, how do we hack insurance?
Okay, well, number one, you want to make sure that you've got your insurance person on your team. So you need your lender on your team. You need your title company on your team. You need your general contractor if you're doing fix and flip on your team. And you need your insurance on your team, whether you have a loan or not. So make sure I'm on your team. Make sure I'm on your family. Make sure I know where you're trying to go. Because where you're trying to go helps me understand how we're going to play together. And so that we can get the best from each other so that all your assets, because you might be buying this one flip house right now, but depending on how you buy it, because he mentioned it earlier, I'm a master networker, I know everybody. Depending on how you're going to buy it, it may affect things that happen in the future. That's why we have umbrella policies. That's why we cover our assets and other avenues, because depending on how you set your deal up, you may be leaving yourself exposed. If we don't have these conversations, you don't know what you've got exposed and what your risk tolerance is and how these lawsuits play out. So get your insurance agent on your team. Make sure your insurance agent, if at all possible, is giving you more than one option. Insurance is fluid. It changes all the time. You have to realize most of it comes from Lloyd's of London. Not all, but most. They have a birthday every year. They buy reinsurance. They renegotiate contracts every year. And that trickles down to the little tiny policy that you're buying through like 7 different steps. And every year, the definitions change, the rates change, the coverages change. So if you're just renewing the same insurance over and over and over again and thinking that what you had 5 years ago is what you have today, newsflash, probably not the same damn thing. We've had a lot of stuff go on in insurance in the last 5 years, as every year. Okay, because again, it's not built for you to succeed. Keep your insurance agent on your team, 1. Number 2, make sure they're giving you multiple options and they're explaining to you why those options are so different. Because if they're not testing the market. And if they're not testing the market, they don't have their finger on the pulse of what's actually happening. Okay? They're just as integral in your purchase and your success as anything else is. So it's very important. Number 3, tell me about your itchies and scratchies. I got to know all the webs. I got to know all the bad stuff. I got to know exactly what you're doing to make sure that I'm giving you the very best to get you where you're trying to go in the rest of your journey. And then number 4, pay me on time so I don't kill you. Don't play games with me.
Repeat that again.
Pay me on time so I don't kill you, because when I buy your insurance, I have to pay it. And everybody think I'd be rolling around in a Benz. I'm not. I'm in a Toyota. So let me explain to you, single mom of 2 kids here, pay your damn insurance on time, because your policy will get canceled. When your policy gets canceled, your lender's going to know your policy is canceled. When your policy gets canceled and your lender finds out, they're going to put that force-placed insurance on you, and or you're going to have a claim before that happens, and you're going to hate me because you didn't pay for your damn policy. So let's be friends. Let's be teammates. Consider me a co-investor on your situation, because I don't want to get sued because you don't listen to what I say. Okay? Because let me be real with you. I don't set the price in the market for your insurance. I don't. I can't give you some Adonis special friend discount. That doesn't exist. Little Princess here is not in control of that. That's not how this works. I'm in control of letting you know what your options are and making sure that the deal gets done right. Anything outside of that is completely beyond my control. So if I'm telling you you should go this way, realize I might make an extra $14. That ain't paying my kids like lunches at school, okay? So it's not for me. It's for you, because again, my goal is to have you coming back like a good drug addict. I want you to come back to this insurance love. I want you addicted to this insurance love. That doesn't happen if you're not satisfied, and you're super unsatisfied if we don't follow these steps. So give me a minute, if at all possible, to get the insurance done so you get it done right with all the advanced quote discounts. Give me all the itchy, scratchy information. Make sure I know what you're doing and what your goals are and what your plans are without any hesitations. And listen to the things that come out of my mouth and pay me. Pay me. Those are probably the 5 most important things.
I got to tell you, that is the most solid advice I think I've heard from any trade professional I have ever worked with.
Help me help you.
Right. And
help me help you. It's all about you. I'm here for you.
Right. And I really do think, and I cannot stress again how much a proper insurance policy, how much that topic is downplayed in the investors day to day. Because even for me, like myself, I'm a hard money lender. I'll say at least 80% of the people that my company does loans for, they don't even reach out to their insurance agent until about 3 days before closing.
It's horrible because there's all kinds of advanced quote discounts. There's all kinds of options. The rates change like every week. Rates change. They constantly change.
Right.
So, I mean, give yourself as much time as you can to get the best product and the best price that you possibly can for that deal. And let's don't have stress at the very last minute, because like I said, mommy is busy. But mommy wants to take care of you as well as I take care of anybody else. So give me the space and the latitude to take care of you, if at all possible.
So Kim, how can the viewers connect with you? How do they reach out to you, ask you questions, take advantage of your service?
Well, number one, you can go to MyRE360 and you can find me. I'm all over that damn thing. I mean, like, you know, I'm an investor myself. I use them. Adonis writes loans for me because I love him. The portfolio and the platform is really, really great. And I've got all kinds of educational modules and visuals where we dig in on some of these specific issues a little bit deeper, which are important.
What's the name of your education series on MyRE360?
I think it's called The Wild, Wonderful World of Insurance. Yeah, very good. And all the W's, all the alliteration. We love it.
And also, you are an actual vendor on MyRE360
Yes.
offering your insurance services.
Heck yeah.
And
educator and a vendor, yeah.
Educator and a vendor. And you can do insurance policies all throughout the U.S.?
All over the world if you need it.
All over the world. So that means that anyone, no matter where they are, can take advantage of your service.
Lucky for you, I'm worldwide, baby.
All right. And how else can people get in touch with you? Social media?
Yeah, I mean, I'm having to hire a new social media person in case any of you need a job, but we are on the Facebook, you know, we're on the LinkedIn, and I think I've got some Twits and some Instas, but more importantly, just call me, just email me. It's 940-367-9740. That's my cell. Be gentle. And then my email.
Oh, bold. That is bold.
I know. It's because I can't remember my 800 number. I think it's 844-GET-HERITAGE. But I don't
think
know if
there's too many phones. There's too many.
All that end bit is all supercilious. The AGE doesn't matter.
Okay.
The age doesn't matter. The rest of it matters. It's Get Harry, but nobody wants to hear that. So it's Get Heritage. My email, kim@heritageriskadvisors.com. You can find us on Google, on Yelp. You can find us on all that stuff. I'm sure Ryan or somebody's going to put all that crap in the bottom of this thing. You can get me. I'm like, Google me. You will find me.
And your website one more time?
www.heritageriskadvisors.com. We show up in the top 10 on Google most of the time if you type in just insurance.
Awesome.
Come get me.
Your phone number real quick?
The Get Heritage, it's like 844.
It's 844-438-4374.
That sounds really close. Yeah. He's probably right. He's probably right. Yeah.
So with that said, I got to tell you, Kim, and I want to first of all thank you for coming out, dropping gems beyond gems. And I want to make sure everyone, please go check out The Wild World of Insurance on MyRE360. This degree of education, Kim spends about 3 hours telling you every single different type of coverage.
Not all at one time. We don't want to scare people.
But over the course of about 18 modules, Kim walks you through topic by topic how having proper insurance can safeguard your investment and you as an investor. So please check her out on MyRE360 Education Series. Find her as a vendor in every market on MyRE360. Check out her social media, check out her website, and her phone numbers, the combination of the ones that she gave you. Kim, it has been a pleasure. You have dropped nuggets, and I cannot wait to get you back on the show at some time in the future because I feel like we could do this for another 10 hours. But...
I love insurance. Let's do it, baby.
All right. Well, thank you again, Kim, and we'll see you guys next time.
Thank you.